Hello, everyone. It's Renee Cormier from the Fractional Referral Network. Today, we're talking about with CMO, Fractional CMO Audrey Nesbitt, as we talk about common fails and tech startups. Audrey loves tech. She's a marketing professional. She's had a background in working with emerging technologies. She's helped startups launch, scale, and drive revenue with expert go-to-market execution. So welcome aboard, Audrey. Really happy to have you here.
Hey, Renee, thanks for having me.
Audrey, as we talk about, critical mistakes that startups make, I'm sure you've seen more than a few.
Mm-hmm.
Um, and, Fractional's working with in that startup space. It helps even if they're not in marketing to have an understanding of what to recognize so that they can continue to have success because at the end of the day everybody is a team.
Yes, yes.
Yeah. So
Um,
what are the most common strategic oversights you see in tech startups?
so some of them, like even just taking it right back to the origin time, a lot of them fail to conduct, thorough market research and misjudge market demand and underestimate competitors, right? And then they fail, and I find this a lot, is they fail to actually convey the message of what their unique value proposition actually is. They just think,
Yes.
oh, I built this great thing. Who's your target market? Everybody. It's like, uh, so, um, and then you see a lot of times they rush to market without actually, fine tuning their product market fit. And so what I mean by that is they just start onboarding clients, onboard, and they don't take the time to actually listen to the early clients and build out a platform or a product for them, right? They
Yes.
keep thinking in this macro kind of market space, and they don't listen to who they're currently onboarding and build for them.
Yeah. I got a great piece of advice in my younger days in business from my brother, who was very successful. And he said, get good first and then get big. So you get good by focusing, right? And it's that listening to those customers and seeing what's really needed. Yeah.
And then actually what's interesting in emerging tech is the opposite can kind of happen. And that is, and I find, Canadian companies, we want to be perfect before we go to market, and American companies go to market. And so I find sometimes when you're trying to be too perfect and you're trying to stay too much in dark mode, right? You're being surpassed by competitors that are getting it to the market quick. And I think a lot of that has to do with that market research and understanding your competitors and timing. I've I've worked on many projects that have failed.
Mhm.
So many have succeeded, many have failed, right? And there was one product that could have been so successful, and they had investors actually lining up. They had investors going, we want to get it to market right now. Like, we need to get it to market now. And they were willing to give the money. We will give you X amount of dollars. You need to start marketing it. Like, you need to get it out. And they delayed and
Ah,
delayed. And what happened is the market crashed. So we think in tech, like, I don't like, even on a small business thing, a small business, maybe local, we don't think how macro politics or macro financial events affect us. But
right.
if for tech startups that need this venture capitalist infusion of money, if the market is tanking, if the general market is tanking, they're not investing in anything. Like, it's a
Yes.
wipeout. They're going to put it into gold, you know what I mean? Or
Right.
cash.
Right.
They're going to get out of the market.
Right.
And so timing, especially on the, well, probably everything, but marketing on even on a restaurant level, if you're opening a big restaurant with a big footprint and a high price tag for meals, and the real estate market crashes, or you know what I mean? It's like it affects
Yes.
you too. It affects, the people spending whatever. So in tech, it's so important that if you have investors and people that know this stuff and they're telling you to get out of the gate and fix it, you know what I mean? Get out of the gate and fix it as we go, fix the bugs as we go. Do it. Don't wait for that perfection, because the market might not align, right? The VC funds run out, and I
Yes.
can find funding goes through phases of what they're investing in. What's the hot product to, or what's the hot tech to invest in? And you'll find out, okay, you're pitching this product and that was hot 2 years ago. And it still might be a great product. It's just not going to get the investing on ramping that it would have in a different market.
Right. So how can startups balance innovation with market demand and avoid, those product fit issues or
Again,
product market?
a
Yeah.
lot of it is that research. And if you do have clients, is listening to them. And really, if you don't have a big budget for marketing gangbusters to try to figure out exactly where your niche is, you really need to get down to your niche and figure out specifically how you're targeting that niche and building out slowly.
Right. Right. Um, so when we look at those financial mistakes you touched on a little bit earlier, not paying attention to what's going on in the market and launching too late or whatever. But let's say you're already in the market. What are the common financial mistakes that tech startups make anyway, and how can they be avoided?
So when I'm consulting on a project and we're talking about a big marketing and PR push, when you start that amplification of that outside messaging, you have to make sure all your funnels are in place. Like, don't do a big PR campaign if you don't have a data grab on your website, right? Like before I even assign a tech stack, like, are we using Google Analytics? Are we using Hootsuite? Are we using HubSpot? Like, before I even get to what tech we're going to use to execute what, I'm like, let's walk through the sales process. So let's walk through this process. We're going to do a massive PR blitz. So we're going to get articles and magazines. We're going to boost posts. We're going to pump out educational content. What do you want people to do once they see that bit? What's the process? Do they go to Google and research you first? At some point, they get to your website. What do you want them to do when they get to your website? Is there a sign up? Is there a subscribe? Are you whitelisting? Like, let's walk through the process and make sure the process is in place so you don't spend all this money on a big PR campaign and you're losing leads because you weren't ready on any of your other assets, your website, your social media channels. Do you know what I mean? It's like,
Yeah. No real
why send them
strategy.
to your website if you're not taking an email, or
Yeah.
there's no button for them to buy now?
Yes,
Like,
that's right.
even think about it in simplistic terms. Like, think of how many times do you go to a restaurant's website, like a fast food restaurant's website, and you can't find the phone number.
Right.
Like, what's the simple, like, what do you want them to do? Are they calling for an order? Why am I looking for it? Do you ever find you've got to do the work? Right? They've got
Yes,
you to the
not, yeah.
website, they got you
Yes,
there,
simple things. Yes.
and what am I doing? And I
Yeah.
think that's a waste of money.
Yes.
So I find some companies, like, when they do get funding, it's like, oh, we have $5 million. We got $5 million in. Let's sponsor the biggest conference in our
Right.
industry. And it's like, that's expensive. Why are you doing that? And maybe that is the right choice. That might be the right choice. You know what I mean? If everything else is in place. If not,
That's right.
like, I consulted with a company that wanted to start. They raised money. They raised money off of a pitch deck with no product built.
Wow.
And they spent so much money thinking they had to sponsor the biggest events. And it's like, you don't have a product yet. Like, what are you doing with those leads? Now they're coming to your website and it's like, soon, coming soon. It's like, that's a
Yeah.
waste.
What a lost opportunity. Yeah.
Absolutely. And then, as we've discussed, and how actually we found each other, which is great, is is I find some startups either don't bring in executives, like macro strategy thinkers, soon enough, where
Yes.
they bring them in too soon and don't onboard them properly.
Yeah.
I personally have been hired to come in, and then nobody spends any time with me. Like, I don't know the budget, I don't know the runway, I don't know when can we start announcing product features or MVP launch, and they're paying me. And
Yeah.
the clock is ticking, but nobody's spending any time with me because they think, well, we just hire this person like a CFO or a
Right.
CMO or a
Like a
CTO,
wind
but
up toy.
then they don't give them anything. They don't
Yeah.
tell them anything.
Yeah.
So it's like,
Yeah.
do you
But
have
you
the
know,
budget?
I've had that happen a lot, and I think a lot of small businesses, whether it's a startup or just a even an established small businesses, a lot of them are shit shows, and it's for not having basic things in place, right?
Right,
Not having a foundation, a strong foundation to market from. If you don't have that, everything you do is an absolute waste. It's a waste
right.
of money, it's a
Yep,
waste of time, it's a waste of everything. And then you
yep,
hire people for positions because you're planning on growth. Instead
right.
of waiting for growth to be sustained and then hiring,
Yep.
they'll hire in advance and then they got to fire.
Yes. Yeah. And
Right?
what I find too, and I've had this happen, is then you have, so I get hired, and then you have the CEO or one of the founders that spend so much time in your silo, and it's kind of like, to me, when you ask 100 people for their opinion, you get 100 opinions. So
Yes.
for me, what I think is efficient and strategic is, who doesn't need to be here, then let's not have them in the meeting, right? Like, because meetings are a time suck, number one, and you hired me to do something, so give
Yeah.
me the key points, give me your messaging, let's agree we can say these 20 things, we can say these things, and now get out of my way.
Yes.
Go do what you need to do, and let me do what I do, and then I'll report to you. Because why hire all these people if you're still dipping and coming in, and then a lot of times derailing the conversations. Do you know what I
Yes.
mean? Like, they derail.
Yes. Yeah.
So a lot of that too is micromanaging and not letting go as a CEO or a founder.
Yes.
But it's
Yes.
not efficient. It's just not efficient. You just can't sustain it. You can't
Yeah.
sustain.
Yeah, that's right. So how should startups prioritize that resource allocation? You know,
For me, what I like to do, especially, well, I guess in any situation, because this should also happen in bigger businesses, is what happens in startups, especially when they're trying to get investors at different levels of raising. It's, what is your, investors want to see, where are you making money? Like, where is your revenue coming in? And a lot of them can't tell you that. Like, or they'll or in a pitch deck, they'll just want a macro, um, hey, event planning is expected to be a $20 billion industry, whatever. Like, they give you some macro data point, right? Like, this industry is going to grow 12%
yes,
year over, like, they give you this big thing. And I say, I would rather see in detail how you're onboarding 10 customers.
yeah,
What's the revenue from those 10 customers? What's the sustainable revenue? And then what are the upsells in those 10? Because then you can scale it to 1 million in revenue, right? So, because big investors want, like, where are you going to hit $1 million? When are
yeah,
you going to get in 1 million? Like, where's your $1 million kind of, are we
right.
talking 5 years? Are we talking 6 months? So I like to show me one customer, show me the process to get one customer, two customers. I want to see that finite detail. And then what happens a lot is squirrels, right? So for me, it's take it back. What do you need to do to get your first $1,000, your first $10,000, your first $20,000? What do you need to do to get it and sustain it? and focus on that and say no to everything else, because you're going to get
Yes.
contacted by this salesperson, this conference, and come speak over here, and come do this, and come do this, and come do that. And it's a time suck. What do you need to do in that initial roadmap time, and nothing else? Nothing else. That should be your focus.
Yeah. Yeah. It's interesting. I've read a lot of pitch decks and so-called strategic plans from startups over the years, and you make an interesting point. Show me how you're getting those customers, because that's what I never see. I see all these numbers that they're pulling out of their
Right,
asses, and there's no process for
right.
how to get there.
And
And so
and
they
that could
think that
be
an investor is going to drop 20,000 or $20 million on
right,
their product. They don't have anything. They've got
right.
air.
And to me, that could be as simple, that 10 customers or 10 clients can be as simple as, I am going to go to this conference in Toronto, and I've got postcards made up, and I am personally going to walk up to 20 different people and introduce myself and give them whatever it is. It
Yes.
doesn't have to be this macro, mind-blowing
Yes.
AI automation, woo, social media thing. It could be as simple as, I'm going to these meetups, or I'm going to host a meetup, or I'm going to do something so niche in my community, like
Yes.
in this community, and I'm going to go shake hands and offer demos or whatever it
Yeah.
is, right?
I'm going to go off script a little bit because you talked about communities. I think that the building of communities is a big part of
Mm-hmm.
marketing now. And the community can look a lot of different ways. It can look like our fractional referral network, or it can look like a YouTube channel. It can look like a lot of things. What are your thoughts on that, Audrey?
I think it is so important. And one of the things that I find in emerging tech that is becoming more and more important is an individual's brand. So one of the things, this is going to hit on that. So I'm going to take the
Yeah.
long route to answering your
Okay,
community
do.
question,
That's
because it's
fine.
massively important. So a lot of startups don't start marketing soon enough, and they think marketing is this big strategy around a final product. But marketing also means your brand, because there's so many scams in emerging tech that, when you look at a process of what an investor does, what does the investor do? If they're interested, they're going to research everybody on the team. They're going to research social media. They're going to research. Um, and if the founders aren't public, like if there's no part of the team that's out there talking about the product, then an investor is going to go, why? Why aren't you talking about the product? So if you can't start talking about your product because you're in dark mode, like you're in keep it super secret mode, you can talk about the industry you're in, right? If you're going into healthcare, start talking about healthcare. Who are your
Mhm.
targets going to be? Start connecting to them on LinkedIn and producing content that's educational or smart commentary or whatever. You don't have to start talking about your product, but you should start getting yourself out there.
Yeah.
And that includes community, because and it's becoming more important since lockdowns and COVID and all that kind of stuff. Even in emerging tech space, what I love is companies have started co-working days where they have a wonderful co-working space and they open it up to anybody to come. And maybe there'll be a lawyer there talking about, startup law, whatever, or, how to
Right.
register, what's your tax jurisdiction, blah, blah, blah. And it's a wonderful, I've actually, on a project I'm currently working on, because I've joined communities and I've gone to these startups, these co-working
Yes.
spaces, I'm getting help. Like I
Yeah.
throw something out into the like they usually have like a WhatsApp group or a Telegram channel to kind of support the community, or a LinkedIn group or a Facebook group. And when you go out and you start meeting these people, and then you throw in a question of, hey, anybody talking to somebody here, or anybody, over, and you'll get answers, and
Yes.
you start connecting dots. And so community is so important, especially if you have a community of users. So there's community for networking and getting that external
Yes.
help, and then there's your internal community, right? So One project I'm on has a big internal, has a lot of users, already has a lot of users. And we have a community on Discord, and we've started on Telegram. And
Okay.
it's being in that community and giving them rewards and incentives for helping you answer questions, right? And helping promote your product and that sort of thing. So I think your work culture, your staff is a community. And if you're good to that community, they're the first line of marketing outreach, right? If you love who you're working for, what are you doing? You're talking about it,
Yep.
right? If you love the
Absolutely.
product, you're using it, you're talking about it. You love it,
Yeah.
talking about it. And then it's the people that start using the product and they love the product. What do? They start talking about it. And we miss that because we're so focused on some big number, right?
Right.
Focus on this big number, we neglect the little number, and that's that little engine that grows and grows and grows and grows.
Yeah. That word of mouth marketing. Yeah.
And it's organic, yeah, it's
Yeah.
organic, and it's you could kind of say it's free, kind of, you know what I mean? Like you're not,
Pretty cost effective.
yeah, there you go, cost effective. It is cost effective.
So why do so many startups fail to establish an effective go-to-market strategy? Why do they overlook that piece?
So to me again, the go-to-market strategy all goes back to market research, really truly understanding your competitors, underestimating your competitors, understanding what it is you're actually building, and is it protected IP, right? So if you come out and say, "Oh, I'm just going to do this AI thing, blah blah blah, and it's going to be great," and it's like, well, anybody can do it. Like you're not you know what I
Yes.
mean? It's like,
Yes.
okay, and your competitors who are already big and established in the market can easily do it.
Yes.
So that's not proper research, right? It's not truly understanding a problem you're solving or a pain point. And is it already being solved by somebody? But also to the degree of that pain point, right? So an example I'll use is Facebook. And you think, okay, well, I'm going to come out with another social media platform because I don't like something about Facebook, whatever. It would have to be so different. Like I'm on Facebook. What's it going to get me to change? To take all those followers and family to go try something new. So it's not just coming in with something, if it's just slightly different, you know what I mean? Are you going to change
Yes.
something that's slightly different
Yeah. It has to be wildly different. Yeah.
or cheaper? Or like there's got to be
Some draw.
something that
Yeah.
incentivizes me to get over the hurdle of learning something new, trying something new. You know, like how many of us are loyal to our phones, to our, whether it's a Mac or an iPhone or whether it's Google, you know,
Right.
Samsung, whatever, and think of the what would it take me to change from well, I already know the iPhone, you know what I mean? I already know it. And
Yes.
do I want
Yeah.
to learn
Nothing.
something
Do I need to learn a
new?
new one? Yeah.
I don't know if I want to
Yeah.
learn something new. You know what I mean? It's
Yes.
have
Yes.
you
Because it takes
taken
time.
correct.
Yeah.
And another thing I find in technology, and it probably crosses a lot of product lines, is it's not just understanding your product, your competitors, but it's also the entry into the market and how long. Like if you're talking about a technology and you think you're going to integrate into all the police departments across Canada, or you're going to integrate into the hospital systems in Canada, or into the healthcare systems in the United States, which are there's more of them, right? Because they have PPOs, HMOs, and county hospitals and that sort of thing. And they don't realize the barriers to entry to get into those systems, not just because of sorry, excuse me, not just
We're
because of
not there.
current products, but what is their buying cycle? Do you know what I mean? Like,
Yes.
did they start this buying process 2 years ago? Did they commit to a contract with another company 2 years ago that's going to run for 10 years or 5 years? Then how are you entering that cycle? Does that make sense? Like how
Yes.
you're coming in with something new, they're tied up in contracts now for 5 years out. Then this now goes to the niche, right? We talked about a niche. So if you can't go into the hospital system or the police departments head on, how do you circumvent that and come in through a side door or a back door? That's through a smaller system or a smaller community or a smaller police department or,
Right.
right? It's now you've really got to figure out your niche.
Yes.
And I think they just think I'm going to build this product, it's going to be amazing. And then I'm going to hire a marketing person and
Yeah.
go. And it's
Yeah.
like, well, where are you? Who are you taking on? Are you coming into the shoe market and you're going to take Nike on head on? Right? Then that's one, that marketing strategy needs a lot of money. Or are
Yeah.
you coming in through a niche market and you're just going to go after hikers? You're just going to go after dancers. You're just,
Yeah.
you know, like what's your niche? Then your market strategy complete, your marketing strategy and your go-to-market strategy changes completely.
Yes. Yeah. Um, let's talk a little bit about leadership because I know from firsthand working with startups that it's very common. This is why I never do anything for free for a startup because the founders get in a fight and then nobody gets paid. Everything just goes to shit and they can have a great product.
Mm-hmm.
uh, and a great lot of things going for them, but leadership, the inability to make decisions or the inability to just get along.
Yep.
Uh, what do you have to what are your 2 cents on that, Audrey?
So my 2 cents on that, well, I have a lot of more of 2 cents on that is a lot of times what happens, and I is you have developers or talented people who just can't manage, right? Or they just can't, they don't know how to manage different personalities, and they come in from a very it's my way or the highway, or when you ask them something, you know, like I'm in technology. If I ask a founder who's usually the lead developer or one of the developers, and I'm like, can you, you know, you explain it to me, and then they like, what don't you get? You know what I mean? And it's like, what aren't you getting, or what? And it's like, you can't. If you're not endearing, nobody gives a shit about you. If you're a shitty
That's
leader,
right.
nobody's going to care. And the only thing they're going to care about is collecting a check and their next gig. They will
Yeah.
want to leave you as fast as possible. And turnover is expensive. So
Yes.
you're either coming in from a leadership perspective thinking, I'm building my family. I'm going to treat these people like a good functioning family and I'm going to care about them because then they're going to care about me back and the product. Or am I going to be a dick and piss everybody off and then they're going to leave as fast as they can? They're going to work side gigs, and then not promote your product. Like they're not
Yes.
going to promote your product because they're not going to believe in it. Um, I've actually worked with some venture capitalists who, when they're looking at investing in something, they look at that and they look at who's the CEO and should they be the CEO. And they will either try to get rid of the CEO, depending on the like how much money they're coming in with, or whether they come in at all. And it's, you know, talking to that founder to understand, do they get that? Do they get now that we need a CEO that's more in sales and marketing than in development? And then just have the founder go, you just need to be the CTO. How about you just be the chief technical officer? You focus on the dev side. You don't have
Yeah.
to worry about
The
investor
people.
meetings, talking at that conference. You build and bring in a leader that maybe already has, like maybe they already have an influencer profile,
Yeah.
or they're already known in whatever the niche is, healthcare, whatever it is, and you just build. And
Yes.
if they're not willing to do that, it's not like you're asking them to give up their shares, you know what I mean?
Yes.
And if they're unwilling, then their ego is going to get in the way. And I've seen cockfights where it's affected product development, where egos just and they sabotage. They end up 100% sabotaging the product, 100%,
Yeah.
because now they're in this standoff in their head, or
Yeah.
I've seen big CEOs, well, I'm not gonna respond to that person. I'm a little pissed off at them right now, and I'm just not gonna respond for a while.
Yeah. Chilling people out.
Well,
Yeah.
how does that help us? Like that, like it's it's kids in the boardroom. You know what
Yes,
I mean?
yes,
Kids in the boardroom.
yeah,
So I've worked with some great CEOs too that are very supportive of the team underneath them. And it's like, hey, whatever you need from me, I'm there working for one right now who's great. And he's in finance, he's a finance guy. So yeah, I like with leadership, it's you probably have, like you said, you're probably better off when you're getting hired by or investing in where you have a founding team that know their strengths and weaknesses and will step out of the way for things they know
yes,
their strengths. Like,
yeah,
why would you want to be a CEO that's got to just pound the pavement and raise funds? You're not spending any time in development. Like, you
yeah,
can't.
yes,
Why would you want
yeah,
to take that on? Let somebody else. And I've met like one venture capitalist specifically, and he says, I will not invest in a company unless the CEO is from sales and marketing. Period. He will not deal with a CT, like a tech founder that won't step aside or whatever. He's like,
yeah.
nope, I will not
I can
invest.
appreciate that. Yeah, I think there's a lot to be said for that, and I think, even if you're not, if in any leadership role, work to your strengths, right?
Yes,
Hire people who complement you, not
right.
mirror you.
And
Yeah,
maybe the tech, like there are great tech founders that are great CEOs, but I think it's also being honest where they say, okay, I do want to move into the CEO role. I do want to excel in the CEO role. That means I have to relinquish my CTO role, or I have to bring in somebody else on that side. So it's the same. It's like, okay, I'm gonna move into this direction and out of that direction, which means I have to relinquish that one.
yes,
Yeah.
yeah. And it's trust, right? You have to build trust. You have to be able um, to offer trust, right? You hire people you feel you can trust, and you have to be trustworthy yourself.
Yep. Hmm.
The culture of a company starts at the top. John, have you got any questions for Audrey today? You're muted, John. You're muted. You're muted. Take your
Uh,
microphone, John. There you
I
go.
got it.
Hey, there you are, John.
Yeah, Audrey. I'm just sitting here reliving my past. Um, I all the and I've kind of each aspect of what you're talking about. I in 1994 I teamed up with a fellow. We founded a company. The I knew that I wanted to get venture capital. He was a technical guy. I come from a marketing background, and we ended up having to kind of move him aside because he was working full time and he was not delivering his part of the deal. He was doing the technical work, and he wasn't delivering, and he wasn't doing a good job managing the freelancers that we were working with, and so forth. And then I did raise money in 1998. We raised our first round of venture money, and immediately I had a consultant, and the consultant who was working for me, who had a small piece of equity in the deal, he immediately turned around, and he didn't like something I was doing, and he immediately turned around and went to the VC and said, "I'd like you to buy me out." And he said to the VC, "Well, why would you want me to buy you out?" He said, "Well, John's going to screw everything up." And they had invested in me. They didn't invest in
Yeah,
him. They
yeah,
invested in me. And so the people are the problem
Hmm.
um, along the way.
Yeah.
The technical people, I'm technical enough to be very dangerous.
Hmm.
And the technical people I found, including my co-founder, they had what I call the secret handshake. I didn't have the secret handshake, so they didn't listen. And they were always telling me, "Oh yeah, yeah, sure, we'll do it that way." And then they go and do it their way. So
Yeah.
when I went for my second round of venture capital a couple of years later, it was a much bigger round. Um, with an idea that I had on a piece of paper, a PowerPoint, a piece of paper, no concept of where or how it was going to make money. We kind of projected it will make money in 7 years, but we really didn't know. And we got $4 million on it like that. And the market, well, actually, the money closed the day the stock market started to tank, or the next day. And I had a prototype on the product that we were expected in 9 months. I delivered it in 3. And in the meeting, the venture capitalist said, you have to change direction totally because you're not making money. Well, actually, I was making money in the original side of the business, but everything changed.
Yep.
You're talking about the market. The market had changed. It had bombed, and the whole .com. We were considered sort of a .com because we had .com in our name. The whole .com thing crashed, and I sat there saying, to my wife, well, they've got almost they got $4 million at this point invested. They're not going to walk away. They did.
Did you at least get $4 million in your pocket, John?
Yeah, right. Yeah, I wish. They put another $1 million in because we had we were talking to American AOL to buy us, but unfortunately AOA went in the course of it. So it's probably the best thing I did in the whole process was I knew my technical limitations. I knew that I needed to get the respect of the technology people, but I wasn't going to get it on my own. So I hired 2 people. One was not so technical. He was more product development, but I hired a great IT director that I could talk to. In fact, the 3 of us could talk, and it was great. And at that point, I had 35 programmers working for me,
Nice.
who all knew they knew way more than I did. But I had a guy who could corral them, so it was no longer like running, trying to corral cats. So, and we existed at a time when it didn't really matter what your plan was for making money.
Right.
Obviously that's changed. It's changed very much today. It was one of the reasons why the .com bust happened, because so many companies didn't have an idea.
Yeah. So I'm in emerging tech. A lot of that is blockchain, cryptocurrency, and that sort of thing. And that's been similar in our market.
That's
yeah. And that's why, months ago or years ago, you could raise on a white paper and not have a product built. And that was one. We were working with a young man, and he didn't get to market fast enough and the market tanked. And it was like, we could have raised 5 million 2 months ago, but we can't now, because now you need to amp up your game, because just investors' taste change. But one note I wanted to touch on, and you kind of brought it up in regards to partners and equity, and I see this mistake often a lot too, and it can kill a startup. And that is, be careful with your equity allocations, right? So everybody is like all excited at the beginning of a startup, and you're giving away, and we're going to be partners 50-50. Oh, we're bringing in a third. And they give shares right away, or the assumption is hey, we have this idea, now we're 50-50 owners, instead of vesting that equity, right? So I don't, like, for those that don't know, vesting is like, okay, I'm going to give you're going to be my chief technical officer, and in exchange that I can't pay you until we raise, you're going to get equity. But that equity is going to be earned over time and based off of whatever your KPI or your performance metrics are. Because a lot of times what happens is you have partners, you're given equity, and then one partner doesn't perform, or multiple people don't perform. And then you have an investor come in, and the investors, the more money they come in, the more they want, right? And they will look at that equity as dead equity. And they'll be like, you have to buy out, before I give you 20 million, you have to get your partners out. Because once they come in with 20 million, they now own 20, 30, 40% of that 20 million valuation. So it's lost. So you know what I mean? So investors won't come in on that. They'll be like, you have to, like, your partners aren't performing, but they own half the company. It's dead equity. You need to buy them out while you have no valuation. You have to get rid of them or whatever, because it gets harder, obviously. So when they start to see that equity mishmash and a shit show happening, they're like, is going to be too costly, and you've got all these underperforming people that are big equity shareholders. So
And
be
it's
very,
not just that, it's also if the principals, the people who are really driving the company don't have enough the skin in the game, they don't necessarily have a reason to stay. And
correct,
they
but
don't have
vest
a
it
full commitment.
instead of giving it to them out of the gate, unless that's part of your, maybe you give them, you know, I was on a vested, I'm trying to think, and I'm like, no, like you're asking me to work for free. I want a percentage vested immediately, and then the rest vested over time.
Yeah.
Well,
Like,
probably
don't give it away.
the best decision I made early on when I realized this consultant was who I gave equity to, because I was stupid. I shouldn't have done it. Because he came in with great credentials, and I thought he was going to be great for what I was trying to do, which was raise money. And he helped a little bit, but not that much. But I realized there was a mistake, and I hired a great a great venture capital attorney. He was the tops in Florida. He became the top technology attorney in Florida later on. And he guided me through the whole thing. He would sit me down and say, okay, here's the caps table. And the caps table to me was like, was like looking at code.
Yeah.
But he would sit there and do it. And this consultant came to me one day and he said, well, I've got a neighbor who's doing, penny stocks, and we could do blah, 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 blah. And I went to the lawyer and I said, John, tell me about this. And he sat me down, closed the door and said, okay, you're never going to do that.
Yeah. Yeah. Oh.
Okay. I'm going to, and in fact, I just got an email from him a couple of minutes ago because I'm having dinner with him on Sunday. But that was a great decision. And that's something that I don't think that and he was expensive. Out of my first equity round, I think we raised 350 on that very first round. His fee was 50. And that was based on time, and probably half of it was time he had to spend with me explaining things to me. But I would say that a lot of technology founders don't necessarily believe they need a lawyer. Okay. And they need they need a lawyer, they need a knowledgeable lawyer. If you're dealing with venture capitalists, and you don't have a lawyer who has been dealing with them for a while, understands it, and is friendly with them, and understands how to sit there and be unfriendly with them, you're going to lose, because the VCs in their sharp suits and their styles
And they will
are
invest,
vultures. They're
and there's
vultures.
usually a clause or something where they invest, and at some point, if you don't perform, they can actually take over or buy out. Like they can become aggressive, very aggressive.
Read your fine print.
Yeah.
And then the other thing is your board members, who the people you bring on. Again, I made a couple of mistakes. I brought on a guy who was one of the principals, the early principals in AOL, and he looked good on paper. He was a brilliant strategist, and he was a total disaster. He worked against me.
Yeah.
I had three of my 7 board members, I think, ended up, being problems. But,
Very good. All right. Thank you so much, Audrey. I want to thank you for doing this call. I will send you your video links and all of that, if not later today, tomorrow. And we will talk again. Thank
All
you,
right.
John,
Thanks,
for
John.
coming on board as well. Have a good day, everybody.
Good job explaining
Bye.
it. You brought back a lot of memories, as I said.
Thank you, Audrey. Thank you,
Not all
Audrey. And
good.
if anybody wants to, if you're a tech startup and you need some expert marketing, Audrey's your lady. FYI.
Thanks.
Thank you. Bye-bye.